Welcome back to the Tuesday Target Audio Breakdown. We are unpacking Week 10 of Juri von Randow's MacroDozer newsletter. I'm Constantine.
And I'm Penelope. Today's letter is called The Countdown, the Crack, the Exit. Juri starts right off with a ticking clock.
Exactly 24 days. JP Morgan just handed the market the ultimate countdown for the Middle East standoff.
Gulf oil producers have exactly 24 days of onshore storage capacity left. With the Strait of Hormuz blocked, they are pumping oil into a finite space. Once those tanks hit absolute maximum capacity, we will see mandatory production shut-ins.
And then Brent crude crosses the $100 threshold. The recession conversation becomes an absolute certainty.
Juri outlines the underlying architecture of this geopolitical move. Venezuela was the opening play. Iran is the centerpiece. The strategy aims to cut off China's energy choke points and unlock the India, Middle East, Europe trade corridor.
The U.S. is dismantling Beijing's commodity leverage pipeline by pipeline. That 24-day storage buffer serves as the embedded margin of error to find a diplomatic off-ramp.
The entire thesis carries a massive assumption. It assumes the domestic financial system can actually absorb a multi-week energy shock.
That's right. And the cracks are already showing. Before a single missile even launched, Blackstone's $82 billion flagship credit fund faced record redemptions. Bank of America's trigger levels for a full market flush were already breached.
Everyone is glued to Tehran. The smart money is already eyeing the exits on Wall Street.
Meanwhile, a massive domestic fiscal shift is happening completely under the radar. The Supreme Court dismantled the administration's emergency global tariffs.
Absolutely. And erasing that heavy tax burden immediately injects over $300 billion of stimulus into the economy. It slashes import costs, relieves corporate margin pressure, and expands liquidity.
All right, moving on. Over in the tech sector, investors wiped $1 trillion from software valuations over fears of autonomous AI agents.
Juri calls out the reality of institutional architecture. True corporate value relies on rigid compliance frameworks, proprietary data, and massive switching costs. AI tools will simply embed themselves into existing platforms, raising prices and deepening those moats.
That's correct, Penelope. Wall Street is currently offering cash-flowing monopolies at severe discounts.
Speaking of Silicon Valley, their ethical grandstanding collided head-on with the military-industrial complex. Anthropic refused to allow the Department of Defense to utilize its technology for autonomous weapons and mass surveillance.
That's crazy, right? The government swiftly labeled them a supply chain risk and pivoted to a compliant competitor. State power aggressively annihilates corporate safety guardrails when national security is on the line.
Looking overseas, a single drone strike on Qatar's LNG facilities sent European natural gas prices skyrocketing by 50%. Relying on imported energy, that will guarantee highly volatile manufacturing costs indefinitely.
In the crypto markets, Wall Street tourists remain completely fixated on Bitcoin's spot price and ETF flows.
Smooth transition, Constantine. But yes, beneath that speculative surface, the Lightning Network is experiencing explosive, unpublicized volume growth. Transaction sizes and network capacities are surging. This quiet infrastructure expansion permanently solidifies the asset's utility as a decentralized global settlement network.
Let's check the economic calendar. Friday's employment report headlines a packed week. Deutsche Bank expects just 30,000 payrolls amid elevated uncertainty around new population controls.
We also have CrowdStrike earnings today, plus Fed speakers Williams and Kashkari. Wednesday delivers the services ISM, ADP, the Beige Book, and Broadcom's critical AI revenue update.
So how do we trade this tape? Juri's Tuesday target is crystal clear. Cash is a position. The official highlight is SGOV. That is the 0 to 3 month Treasury ETF.
In a market where credit is cracking and a 24-day geopolitical clock is ticking, capital preservation takes absolute priority. Keep your position sizes small and your time horizons short.
Fade the obvious panic plays. Watch for entry points in beaten-down software and mega-cap tech where valuations have compressed far ahead of fundamentals. Let the tape come to you.
For the exact option setups, including potential iron condors on silver and energy, head over to the Trade Alerts section in the subscriber chat.
Juri also offers the Elite Trader Plan and one-on-one mentorship calls for anyone serious about mastering the craft. Thanks for tuning in to the Tuesday Target Audio Overview. We will catch you next week.